going on, people? I'm going to save you the introduction here. Just going to get right into it. Right now we're taking a look at Netflix on the monthly time frame. We have the one retracement that we're working with, or extension in this case, because we're finding the extension levels from price action that occurred in 2002. So this Fibonacci is plotted from the swing high of July 2002 to the swing low of October 2002. And then we toggle the golden ratio extensions up to the 5.618 extension. So you have the 1, the 2, the 3, the 4, and the 5. So quick observation here. You can see we rejected pretty nicely at or around the 5.618 extension at 575.88 back in November of 2021. And excuse the ads. I don't pay for TradingView. And then we got brought back all the way down to 153.90, essentially, the 4.618 extension. And we've been on a tear ever since. Maintaining that macro trend line here so far, right? I don't know what happens if this breaks, but this trend line is just plotted from the all-time low to the low in 2012 and extended right. And then the upper trend line is swing high from 2004 to swing high in 2011, extended right. So that's what we're working with on a macro. And then since we're trading between these two price points, 5 and 4.618 extensions, what we're going to do is get the micros between those two prices. So we're just going to plot another Fibonacci, go to coordinates, type in 575.88 and then 153.90. Boom. And then we're just going to extend that left so we can see how price interacted at those levels in the past. All we're concerned about right now, guys, is the trading between 575.88 and 153.90. I'm not concerned about the other extensions because they're not relevant at this time. Just to recap that amazing short that we took last week, we actually took 2 entries, both of which went 100%. Let me drop down to the 4-hour. So I was expecting resistance at 434.20 pretty much since the end of July. I actually went short on Netflix a little early back here and got absolutely smoked. I forget what this was. This might have been earnings at the end of July. In fact, I think that's what it was. But relatively weak price action at this 434.20 price point. If you look at the 4-hour a little bit closer, we see MACD had a bearish signal line cross on Wednesday, September 6th. And that was my first initial signal that this price point of 434.20 was probably going to be retested in the near future and most likely wouldn't hold. Was looking a lot at the weekly. You had a weekly bearish signal line cross on August 7th of this year. So relative to momentum, I didn't see this holding. And if we zoom out, to me, what this looks like is a giant fucking bear flag. That's what it looks like to me. But again, we entered 360 strike puts on Tuesday of last week before close. I think it was 30 minutes before close I put the signal out. And the following day, obviously, we had a -3 to 4% move to the downside. I think it was a 100%er, and then we ended up swinging. No, we took profit on that first set of 360 puts on Wednesday at about 100%, and then shortly after we re-entered, as price did not look very promising for bulls here. And we entered the same contract, 360s for October 13th. And they went 100%. between Wednesday and Friday. So I sold the second batch on Friday, and I think there's one subscriber to Only Gains that is still swinging. I do believe that Netflix has some more downside in the tank. My target range is 362.87 down to 347.86. That would be an additional 8 to 12% move to the downside here on Netflix. Again, that entry was for October 13th expiry, if I'm not mistaken. So we have a little bit of time on our side, which is good. Momentum is on our side. And I definitely think we retest that 362.87 down to 347.86 range. As you can see here, it's good reason to expect some sort of bounce here before any continued downside. Although on a longer time frame, I do think we end up retesting this macro uptrend at some point. 254.78, 210.13. Those price targets will be on my radar as soon as we retest that golden pocket between the 5 and the 4.618 extensions. But we'll play it by ear for now. All we're worried about is that target range of 362.87 down to 347.86. As far as resistance goes to the upside, I'd treat 434.20 as overall resistance, but I don't see us retesting that. It would be quite a move to the upside, a 10% move to the upside. As we know, Hollywood and all the actors guilds and producer unions, whatever you want to call them, they're on strike. Hollywood's not looking too hot. There's a lot of controversy surrounding Hollywood right now for many reasons. And you have some bearish news coming out about Netflix, about the CEO's outlook for growth in the near term. Doesn't look too hot for him. I'm not a fan of Netflix. Never have been. This isn't a vengeance short by any means. I'm just not a fan of the company. But yeah, that's Netflix, guys. Definitely think there's more short opportunity. If you missed out on that signal at 434.20, I do think you have that potential for an 8 to 12% move to the downside to target range, 362.87 to 347.86. Move on to Tesla. All right, so Tesla. So back in December of 2022, I called for a move to 108.46. As you can see here, we bounced nearly perfectly off the 6.618 extension at 108.46. These levels are derived from price action that occurred in 2010. Same concept as I showed you with Netflix. One retracement from the earliest price action created an all-time low, so swing high to swing low, and then you just discover how high the golden ratio extensions remain relevant. So we have price action up to the 8.618 extension here. This is COVID here, so there's confirmation in these levels just visually. You can view them as being solid levels to work off of just from first glance. So COVID here, 5 to 4, then you have a nice boom following the COVID crash. So all-time high created. I've been monitoring this head and shoulders that I do believe is still valid on Tesla for the time being, since I think January. This formation or this pattern got brought to everyone's attention fairly recently when TrendSpider and I think another account put out a tweet about it. But they were late to the party, right? We were short here in December to 108.46 here on Tesla. near perfect bounce off the 6.618. Shortly after that, called for a retest of 220.22, which is the 7.618 extension. I think JP Morgan or Morgan Stanley, one of the banks, put out a price target of 220 right around January or February. I'd have to double check. Might actually still have the tweet. Let's see. Oh yeah, so revisit a 7.618 at 220. That was on February 1st, 2023. Tesla downside target on December 22nd, 108. Boom. Boom, baby. But where is the JP Morgan price target? Is that it? I don't know. They definitely put one out. Anyways, still watching this head and shoulders. We have the dynamic neckline here, which is auto-generated from TradingView's head and shoulders pattern that you can draw. And 220.22 is a major support area. So we'll pull up the micros between the 8 and the 7.618 extensions here. We'll take a look at what's going on. So just like that, we have our micro levels between the 8 and the 7.618 extensions. As you can see here, we rejected pretty hard off the 288.65 level. Came back down, retested 220.22, got a nice bounce there. And now we're looking pretty interesting here above 260.29. 260.29 is my short-term downside target. Right now I'm on the 4-hour. Let me go back to the weekly really quickly though. Pull up the MACD and RSI. So weekly MACD curling up. Wasn't much selling momentum the ending weeks of August. And you see that nice push here. And we're almost at a bullish signal line cross. In fact, we got a slight bullish signal line cross here on the weekly. But this could easily be a false signal. Go to the daily. Daily MACD. Losing a little bit of momentum here, but pretty strong nonetheless. 4-hour. Looking a lot different. You have a bearish 4-hour signal line cross here, creating a lower high at supply, local supply, and you're really fighting to hold above 270. I did swing 220 strike puts for October 20th expiry, so quite a bit of time on that contract. The fill was at $2.24 per contract, singular contract play, $224 entry, and we're looking to take profit on that contract this week. We're not anticipating that contract to go in the money. That would be a 20% move, but who knows? You know, you never know with Tesla. This thing moves 10, 15% on any given day without news, never mind FOMC week. So what we're looking for here is a move down to 260.29. Previous resistance from the week of the 31st of August. Could be support, but we will see. I'm leaning more towards this being weak support and seeing a continued downside move to retest the neckline from this head and shoulders, which would be about 239, 240-ish. Obviously, it's an ascending trend line, so the longer time goes on, the higher the support level might be. So short-term target 260.29 on Tesla. Longer term, you know, from now to mid to late October, 220 and 22 cents. The 7.618 extension. Obviously, upside resistance sits at 288.65-ish. You get a break there, folks, and she's likely ripping to that golden pocket between the 8 and the 7.618 extension at 348.99 to 341.17. That is previous supply, right around where this proposed head formed. But I do have to be brutally honest, I am leaning towards downside on Tesla in the near term. Take a look at SPY. SPY on the weekly. We'll give you the historical golden ratio walkthrough. And this isn't even it. This is a separate sequencing. Let me pull up what I'm actually working with. So we're working with the extension levels from the crisis in 2008 on a non-log scale. And just look how pretty it looks for now, right? Look at that beautiful, beautiful price action here. And we're going to add the COVID 1.618 extension. COVID. And then we're going to add the 084 to the 08 3.618 extension micros, which are right here. And now we're rocking. Now we're rocking for now until more price discovery occurs to the upside or to the downside. But just for the sake of it, we'll add a few more levels. So here we have the 08 3.618 to 2.618 golden pocket. And then we have the 08 4.618 to 1.618. Irrelevant. Bear with me here. 08 3.618 to high of 2020. That's what we need. All right. We have all our levels that I've been trading off of for 2 years. Let's get into it. So we're on the daily here. This daily candle looks extremely heavy to me. MACD and RSI not looking too hot. Get rid of my annotations for now. All right. Should be good. Should be good.
Detector error in child bedroom. Please see manual.
Oh my god. I gotta change that fire alarm. Where's my fucking Head and Shoulders? Where is it? We'll redraw it. Alright. Alright. Head and Shoulders. Head and Shoulders. Knees and toes. We got this bad Larry. Jesus Christ. Okay. We got this bad Larry here. To be very precise, right? Precision is key. Pennies matter. I'll say it till the day I die. How's that looking? All right. We have a Head and Shoulders, potential Head and Shoulders forming at the golden pocket between the 4 and the 3.618 extensions from the crisis of 2008. Very heavy daily candle. RSI pointing down. MACD looking pretty weak here. You're just about to have a daily signal line cross, bearish signal line cross here, which might come with a zero line cross. That would be very bearish. Weekly, not looking any better. You actually already have a weekly signal line cross, which came on Monday, August 14th. RSI is sitting at its 200 SMA. Now if you look here, we have another Head and Shoulders back here. You look at this price action at the all-time high on the weekly. RSI was sitting right at the 200 SMA, and then you had that major breakdown the following week of the 18th of January. So we have a very similar oscillator setup here on the RSI. Weekly's looking pretty heavy. Look at volume. Nice volume on the weekly. And then on Friday, we actually had the highest volume since June 16th of this year on the left shoulder back here. My downside target for SPY is 428.78. Of course, the neckline from this Head and Shoulders, if this is validated, this trend line, the neckline is ascending. So as time moves forward, the support level gets a little bit higher. But we're looking at about 434 to 435-ish into the end of October if we were to treat this potential Head and Shoulders neckline as a dynamic support level above 428.78. But I do see more downside in the future, especially this week. I'm not leaning too bullish for FOMC. I do think they're going to raise at least 25 basis points. A lot of people have their heart out on them pausing, which may or may not be a bullish situation. If I'm not mistaken, most recessions occur after the Fed pauses rate hikes. So that's what we're looking at for SPY. Price action this week, if we see a move to 428.78, that's about 330, 3.3%. And then down to that neckline, it's about a minus 2% move to 434, 435-ish. So to finish out the month of September, I would say 434, 435-ish, and possibly a move to 428.78. 428.78 is the 0.786 between the 0.84 and 3.618 extensions. I don't mean to confuse you. Eventually, I will teach you all my approach to Fibonacci sequencing, but just to get the gist of it, I use historical market events, and I trade off the levels derived from those historical market events. Obviously, SPY only dates back to 1973. Is it 73 or 93? $1993. SPX goes all the way back to 1873. So I usually, when I'm teaching this, I'll pull up SPX and we'll look at the whole picture. And we'll go through each historical market event, find confluence between all the golden ratio levels, and then trade off those. But that's that's for another video or another live session. So that's Tesla, Netflix, SPY. Someone wanted me to take a look at Lucid. This is the first time I've actually opened up a Lucid chart, and it absolutely disgusts me. I forget who asked for Lucid. Let me take a quick look. PD. Brother, just got to be honest with you. I'm not liking this chart. I don't even want to do anything to it. I'm not a fan of this. Without analyzing the price action with any indicators, I wouldn't touch this. Is there, logically speaking, is there potential for big upside here? Yeah, if this low holds from June. I don't know much about the company. They're obviously a competitor to Tesla, and I don't think they're going to fare well competing against Tesla. Tesla has no debt. and a lot of cash. I'm not sure what the situation is with Lucid, but I don't see them being a competitor to Tesla. I think Tesla is going to have not a monopoly on EV, but I don't think any new emerging EV companies are going to be doing anything revolutionary that Tesla is or isn't already planning on doing. So I really wouldn't touch this, brother. If anything, I would just buy shares. You know, if you're trying to go long here, I wouldn't buy contracts. I wouldn't trade options on this unless they're like 2-year leaps. You know, at $5.92 a share, yeah, I might entertain the idea of buying them at these lows. And, you know, maybe you do see a retest of $8 of, you know, $18. That'd be a good buy down here. But that's as much attention as I'm going to give this chart for now. I'm not a fan. And then, last but not least, the team and we were looking at PayPal over the weekend. PayPal, it's a very interesting chart. Same idea, guys. One retracement up to the 6.618 extension in this case, and we can just look at how beautiful that works out. We'll go down on the weekly so we can see a little bit more detail. You have that rejection at the 6.618 extension at 303.10. Again, this retracement is from swing high in 2015 to swing low in 2015, all-time low. I was looking at this descending wedge here, or what might be a descending wedge. And then, because we're somewhere in between the 3 and the 1.618 extensions, we're going to use the micros between the 3 and the 1. Or the 3 and the 2, and then the 2 and the 1. Which are... Did I double dip? There we go. Okay. Just to recap, we have RSI sitting in an uptrend. We have bullish divergence on MACD on the weekly. Sorry, on the monthly with the histogram. So price creating lower highs, lower lows, momentum creating higher highs, and you have that monthly signal line cross here. Looking pretty bullish on the monthly. We drop down on the weekly. And we're looking solid. Definitely looking solid on the weekly. As far as volume goes, that was a pretty nice weekly close there last week. Breaking out of this descending wedge. So my plan to long PayPal is to wait for a retest of the golden pocket between the 2 and the 1.618 extensions here. Price point 66.28 down to 65.54. This daily candle, we rejected pretty hard off that golden pocket. If we go to the 4-hour, it's looking a little bit less bearish. This looks like it is stair-stepping up. Okay, so we have a pretty steep uptrend, but for the most part, looks like it will hold and retest 66.28 to 65.54. Of course, if the rest of the market doesn't do well during FOMC, you know, if everything sells off, then it's possible this descending wedge doesn't play out and we just make a lower low. But my long would be an entry right about here. So entry at GP between the 2 and the 1.618 extension. And I would be targeting the $75 strike call for December 15th, about 90 days to expiry. I think the contracts are relatively cheap. Let me just double check. So PayPal, we got December 15th, 2023. 75 strike calls are sitting at $1.40 on the bid, $1.47 at the ask. So you have a bid-ask spread for the 75 strike call for December 15th, 90 days to expiry. Bid-ask at 140 to 147. Of course, premium would be a little bit more expensive if we got a retest of 66.28 to 65.54. So ideally, we're looking at an entry around this range. The sooner we enter, the better. So long as volume is there and momentum is on our side on the larger time frame. So we want to see the signal line move further away. I'm sorry, the MACD line move further away from the signal line, create some space. And we also want to see some fat green histogram bars appear on the MACD. And we do not want to see RSI fall below the 200 SMA on the 4-hour. We want to see strength here on a potential entry to go long to 74.90 with that 75 strike call for December 15th. So that's what I'm planning on doing. If the setup is there. And if it is, we're getting paid. That is a 14% move from entry level. Now, this could go a lot higher. If we get a big breakout here, if we can break out above 74.90, then we're looking at a lot of time on the contract still, because we're going out so far to December. I think the risk to reward here is pretty high. That 14% move to 74.90 would be a beauty. It would be about a 15-16% move. Clear as day that we should be exiting that contract if we do enter around this supply, which goes back to February. But if we do get that break, then we're talking about $81, $85, and so on, possibly up to 106.23 over the course of the next 6 months. We will see what happens with PayPal. Lots in the air. We'll take a look at NVIDIA. NVIDIA is like my big short of the century that I'm waiting for. Excuse the clutter. Let me just clean this up a bit. And I'll walk you through my NVIDIA chart. Okay. All right. Same concept. Swing high, swing low, all-time low, extended up to, this is a beauty here, the 14.618 extension at 462.68. Now, you might hear that and be like, what the fuck are you talking about, Welch? 14.618 extension? What are these imaginary Fibonacci levels? No one does Fibonacci like me. This is what I call the historical golden ratio approach. And it's treated me very well for the last 2 years. I've made some incredible calls with it. For example, this is like my trophy here. Where is it? Okay. And then where are my tweets? fuck it, give us the 13.618 extension on January 20th. So in my old server, back in December of 2022, when this right shoulder was forming, I recognized this as being a giant macro inverse head and shoulders. Okay. Beautiful bounce at the head at the 11.618 extension. Horizontal neckline at the 12.618 extension. And then, of course, this whole pattern started forming on March 29th of 2022 at that retest and rejection of the 13.618 extension at price point 282.04. So when I saw that, I got very excited. I said, you know what? It is bear season. The doomers, the doom and gloomers were out in full force back here. Same thing on Tesla. When Tesla bottomed at 108, everyone was calling for $70 and $50 on Tesla. Same thing on NVIDIA. Same thing on everything. All the doomers were calling for more downside. But your boy saw this on NVIDIA and he said, you know what? We're going to long this shit, guys. We're going to long this shit. First, we're going to go long for a retest of the 12.618 extension at 171.93. So we have where are we? Where's my proof of work? Where are all my tweets, guys? I deleted them. Anyways, we went long here to 171.93 for like January 19th calls. Those went very well. They went in the money. And then on January 20th, in my previous Discord, I was aiming for a breakout above this neckline and a retest of the 13.618 extension at 282.04 on January 20th to complete this inverse head and shoulders pattern, which we did see. And this whole move, this whole pattern, not considering the breakout part, took essentially a year. What was this? March 30th. And then March 30th, 2023. So this inverse head and shoulders took a calendar year to quote-unquote complete. The interesting thing that I find with inverse head and shoulders patterns is they aren't complete until they create a new high or a new low, right? So one might say that this pattern was complete once we retested 282.04, but what you should do is actually look for a continuation in direction after the pattern is quote-unquote complete, and that's exactly what we saw. So we had a big gap up from this 282.04 range, and we're having trouble here at the 14.618 extension at 462.68. This is a price point that I've kept a very close eye on. Let me pull up the micros between the 14 and the 13 because those are the levels that are relevant at the moment. So we're looking pretty bearish here, folks. My short-term target's 416.18. Over the course of the last 2 weeks, I had a couple bad entries, premature entries on shorts on NVIDIA. This thing is coming down. My target short-term is 416.18, but I do see us eventually filling this gap, and I would like to see a retest of, if not previous all-time high, 340.74, the 0.382 between the 14 and the 13.618 extensions, a move to 282.04, the 13.618. I think it's possible that we see a giant move like that in the near future. That would be a monster move. That's 35%. we're talking a mere move of 5% to 416. 18, about 5.5%, 5% to 416.18. Obvious local support from Monday, August 14th. If we look at the weekly MACD, you had a bearish signal line cross here back on August 7th. This faked me out like a bastard. Okay. I thought it was game time. I really did. I thought we were going to get that move. But of course, shorting NVIDIA is a very dangerous game. So a lot of people got smoked. Over the course of the following 3 weeks, you had a retest and a break over 462.68 the week of August 28th. But you failed to have a bullish signal line cross here on the weekly. And then, of course, the last 2 weeks, NVIDIA has dropped 10%. And the weekly MACD is not looking too hot. Weekly RSI, look at how overbought that fucking thing was. And now, on the weekly, we're approaching the 200 SMA on RSI, paired with a bearish histogram. Momentum sits on the side of the bears here. Good volume here on the weekly. Lots of selling pressure, and then on the daily, doesn't look any brighter for bulls. I definitely think we retest 416.18. Again, bearish signal line cross here on the daily on September 7th when we were failing to break back over 462.68. 4 hour, not looking any better. You had a 4 hour bearish signal line cross just on Friday. This looks extremely heavy to the downside, guys. If I could sell my house right now and put it all on 416 strike puts a month out, I would. If you are going to short NVIDIA, buy as much time as you can possibly afford and pick a strike that is maybe not in the money, but close to in the money, or like a reasonable target. Okay, so a reasonable short here on NVIDIA, for 2 weeks to a month out. Remember, the contracts are still going to be expensive on NVIDIA. They're just going to be. They are. But that's a reasonable move, for 2 weeks to a month out on NVIDIA here. Do I think it's going to go lower in the course of the next month? Yes. But since we're trading, since we're here to make money, we want to set ourselves up for success with a contract that, one, has volume, two, has a lot of open interest. We want to pick a liquid contract, and we want to pick a strike that has a high probability of going close to, if not in the money. So anything outside of 416 to the downside, I would say leave it off the table for now until we cross that bridge when it comes. And then, assess the situation there, make sure momentum is still on the side of the bears, and then we start exploring lower strikes. But who knows, maybe this just fucking, this just releases to the downside. The daily is just horrendous to me. The weekly, it's just horrendous. We have bearish divergence here on MACD. Lower highs, lower lows, higher lows, higher highs. That's bearish divergence. That's the weekly. Daily looks no different. Higher highs, higher lows, lower highs, bearish divergence. So, pretty self-explanatory. I'm bear mode, guys. I'm not gonna lie. I'm wearing my bear mask, and I'm pretty confident. So we'll see what happens this week. We have a 443 strike put that we swung over the weekend. Right before close, we entered that, and we're looking pretty solid. So SPY on the 1 minute. You had that last bit of sell-off in pre-market across the board here. Netflix sold off into pre-market. NVIDIA created a new low of day in pre-market. Look at that. New low of day here. Looking solid. Oh yeah, Apple. And that'll be the last one. That'll be the last one. All right. Let me clean this up again. So we got all our micros ready to go. Just want to give you the full picture here before we get started. Same deal with Apple. Swing high to swing low, all-time low, extensions up to the 7.618 extension at 407.33. Obviously, undiscovered price point. So we're only going to be using this price point to find the relevant levels between the 7 and the 6. All right, so between the 7 and the 6, we have these micros here. And that's what we're working with. Now, Apple, as you can see here, there's a lot of distance between our micro levels, between the 7 and the 6. And just to recap my proof of work on Apple, do we have my tweet? Let me pull it up. It's pretty impressive. Pretty impressive. Let's see. KO Fibonacci. 124. So if we look back, when did I call for 124.64? November 30th, 2022. November 30th of 2022. November 30th of 2022. Here we are, right here. Apple to 124. Boom. 6.618 extension, 124.64. Would you just look at those apples? Just look at it. What a beautiful bounce. And then, last but not least, 195. On May 1st of 2023. May 1st. May 1st of 2023. When we retested 164.83 on Apple, which is the 0.236 between the 7 and the 6.618 extension, I thought, 195.94 might look sick on Apple. Remember, back then, that was undiscovered price action. That's a new all-time high. How did I know 195.94 was going to be a solid level to look for a rejection at? Well, because of the whole historical golden ratio, of course. Right? Isn't it incredible how we can just discover solid price action and solid price levels to look for ahead of time? And theoretically, we could have found that price point in 2009. We could have found it last year, because it's all derived from price action that occurred in 1982. Okay, so playing off those micros between the 7 and the 6. If we look at the weekly, we got that rejection at 194.95. My target to the downside short term is 164.83. 164.83. Weekly MACD had a bearish signal line cross on Monday, July 31st. RSI sitting below its 200 SMA. Lots of bearish momentum here. And then volume. Volume looking solid on the weekly. Bearish volume stepping up. If we look on the daily, good volume. Daily MACD doesn't look too hot. Although this may, I won't even say it's curling because RSI is still looking pretty bearish here. 4 hours looking like continuation all day. Obviously you have that local demand zone here, or you know what most people would play as local demand. But I would actually, you know, treat this as weak support. This is only the previous all-time high, right? Everything else was undiscovered price discovery, or undiscovered price action. So we have this whole range here. I would view this as being weak support. It was strong supply in the past. I'm viewing it as weak support. I think momentum sits in the side of the bears here. The ball is in the bears' court. And the funny thing is, when I say that, a lot of people are like, "Oh, you know, you're a doomer now. What's going on?" Well, I was bullish when everyone else was bearish, and now I'm bearish when everyone else is bullish. I think it's working out pretty well. So 164.83 is my downside target on Apple. And then same situation, guys. We're going to be playing more downside once this price point is achieved, if the price action calls for it. But what I started to say was 195.94 down to 164.83. That is a huge range to play with. So what we do here is we find some more levels. We deduce the golden ratio a little bit more. We set up another micro fib between 194 or 195.94 down to 164.83, or 2 price points of significance. And now we have a nice deduction of range. So target at 164.83, and I'll just add the labels here so you can understand. So this is the 0.236, 0.382, golden pocket, 0.786, between 195.94 and 164.83. Having a lot of trouble here at 176.08, the 0.382. Obvious support found at 171.69. As you can see here, it's validated from previous price action in the past. I think we retest 171.69 early this week. If that breaks, it's a clear shot to 164.83, folks. Guaranteed, or your money back. Just kidding. I'm looking to short Apple, ideally on a retest of 176.08-ish, right? That would be a great entry here. Look at that 4-hour rejection. Yeah, you had that wick, but look where the body settled, below 176.08. So if we do see a bit of a bounce here early in the week on Apple, which I'm not anticipating, I'd wait for a retest 176.08-ish, and then either enter close to end the money puts to 171.69, or find a contract, target the contract of 164, 165-ish, rather, for a little bit further out, a month out. Again, we got to play it by ear. We got to make our decisions based on what price action we're provided, and go from there. But that's Apple. I'm sorry if I was rambling a bit. I hope I was clear enough. I hope my mic is coming in clear enough. But very excited for this week with this group. Congratulations to KO on swinging those Netflix puts. I do think they're going to go in the money for you. You're up quite a bit, so don't be shy to take profit on that original contract that we signaled for. And look out for my signals on NVIDIA, Tesla, etc. We are in Tesla 220 strike puts for October 20th. And then we did swing that one 443 strike put on SPY over the weekend, which does expire tomorrow. So hopefully, which I think we will see, a drop below 443, our strike. I think that will go in the money tomorrow morning, and we'll have a great opportunity to take profit very early on. It expires tomorrow, guys, so we're going to be looking to sell in the morning session before noon. We want to capture as much profit as possible, capture any volatility that might occur in the early trading hours, and then look for more opportunity cautiously as we enter the FOMC meeting. And Big Daddy Jerome Powell hops on the podium trying to smoke the puts and the calls. We don't want that to happen. We're going to do everything in our power to make sure it happens to no one. So if you're watching this now, if you have been unsuccessful in the past trading S&P 500 or anything for that matter during FOMC or data releases, it's probably because you're playing short-dated contracts, 0 DTE, 1 DTE. You do not want to get stuck on the wrong side. So you got to be patient. It's almost better to not trade these weeks and just wait for the market to settle. But again, there is a lot of opportunity to be had during these times. So we're going to try to capture as much volatility as possible this week in a safe way without risking too much. But that's all I got for you. Hope you enjoy the video. Feel free to comment, send a message, send a DM, ask me any questions. I have a link in my Discord bio for one-on-one sessions if you'd like to spend some time with me and learn my approach to technical analysis in a more in-depth manner. I'll teach you how I use Fibonacci, and we'll just talk market things. All right, guys, see you in the morning.